So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey, what's up, everyone? This is Kirk here again at OptionAlpha.com, and on today's Daily Call, I want to get back to, again, the topic of trading options with a small account, and more importantly, maybe just going through a couple things that you can do if you are trading options with a small account, little like checklist, reminder things that I think are important, and we'll cover the high overarching stuff. We're not going to get into, obviously, like the nitty-gritty details in a short podcast like this, but the first thing is, when you're trading options with a small account, you've got to focus on small positions. This gets down to really the heart of everything that we talk about here at Option Alpha, and that's making sure that you know what your edge is, right? We're playing that implied volatility edge in the market, the expectation that implied volatility is always overstated, and therefore option pricing is always overstated. So if that's your edge, then we know that that edge plays out over time. And the only way that you stay in this business long enough to see that edge play out is you don't blow up your account early on. So you have to focus on small positions, have got to keep your position size under 5%. The smaller, the better as you get started. Don't try to overstretch your account. Or the saying is, don't run before you can walk, right? Because as I've talked about before, and I think we even did a podcast on this on the main show way back when, maybe the earlier episodes in the teens, the reality is that even if you have high win rates, you have a high probability of success, great trades you're putting on, over allocation can kill you. And that's because with a small account, you should be focusing on not losing as much and increasing your consistency. What ends up killing people with small accounts is that they don't know, and neither do I, really, for that matter. We don't know when losing trades are going to happen. We don't know the sequence of returns that we're going to get. If I told you that you had a 70% chance of winning, does that mean you're going to lose in the first 3 trades? Or does that mean you're going to lose in the last 3 trades? So the first 7 out of 10 trades could be all winners, or you could lose the first 3 trades and win the last 7 trades. It's still a 70% win rate. You just don't know when those returns are going to come in, when they're going to be profitable versus losing. And so if you overallocate early on, you end up putting yourself into a quick hole that you never can recover from. And that's what I see a lot of people doing. So again, focus on that 1 to 5% of equity risk per trade. The second thing you need to do is you need to be neutral in your direction. Stop guessing where the market's going to go. Have to have neutral positions, which is very easy to do with a small account. You can do very neutral iron butterflies, iron condors, and you just use those 2 strategies interchangeably to get some neutral positions on in the market. Don't take the directional risk of the market moving up or down. Please keep all of your positions neutral, at least when you get started. Then when you start growing your account size, you can start taking on more directional trades if you want to. And I usually say, as long as you're balancing them out with some other directional trades on different ticker symbols. And the last thing you have to do is you have to diversify. Now, we did a podcast before about diversifying on the main show. And basically, if you have a small account, you can diversify across at least 10 different ETFs very, very easily. Maybe a couple $1,000s of risk, and you can get diversity across a wide range of industries, sectors, countries, currencies, metals, commodities, etc. Right? It does not take a lot of money to diversify and have a completely spread out portfolio. And why this is important with the small account in particular is because, again, you don't want any one sector to basically wreck your probabilities or wreck your numbers. So the more you can diversify out of your risk and diversify across different ETFs and different sectors, currencies, commodities, etc., the slowly and steadily grow your account, and again, not have too much risk. So the alternative to this, and again, something I see a lot of people do, is they allocate way too much money to whatever or industry is hot right now. So they have, let's say, a Facebook trade, a Tesla trade, Apple trade, Twitter trade, right? Like all this technology, social media allocation. They've got nothing in, say, utilities or healthcare or, currencies like the euro or the yen. And if that sector has a real big pullback or a real big run higher, that could really dramatically impact your returns and kind of, again, get you off course from where you want to be. So what I suggest is try to pick some of the major sectors, ETFs, again, currencies, countries, whatever you want to do, diversify out as much as possible early on, maybe one trade per sector, ETF, etc., so that you don't have too much risk in that particular area. And again, one basically domino is not going to knock down the rest of your portfolio. So as always, hopefully you guys enjoyed these podcasts. If you have any questions, let me know. And until next time, happy trading.
Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.